Well, hello, Matt. Welcome to our next episode of Going Live with Good Soil. What is this, episode 38? Is that what it is now? Is that 37 was
38.
last week?
Yeah,
38
it's
this week.
kind of crazy. We're closing in on a year already.
Yeah, yeah, I know. It's coming up soon. I mean, maybe when we get to episode 69, we get like a really special speaker. The All In podcast, they said that they were going to have episode 69 and they kind of hinted towards Elon Musk kind of be a guest appearance. But then they just numbered their episodes as number 68 and then went to number 70. They skipped 69. So I think they're saving it for Elon. And I think he's still maybe due to be on their podcast one of these weeks. We'll see.
I hadn't given it that much thought, but that's not a bad idea.
Yeah.
If we can get Elon on, that'd be a slam
Yeah.
dunk. But I think Elon's got
Yeah.
a lot better odds of that than you and I do.
We'll get Dave Lee on in our episode number 69. That'll be our special guest.
Right.
Arzad says in the comments he heard Dave Lee talking smack about me in his latest YouTube video about my Street Fighter 2 skills. I don't know. Maybe I'll have to play him in Street Fighter 2 on live our live stream for episode 69 or something like that. So anyway, enough with the small talk. Hopefully enough people joined in and we can get started here. This is being recorded on Twitter Spaces and on our YouTube live channel, both at the same time. So you guys can watch anytime later from the beginning if you miss or have to cut out. But I'm excited. We're going to talk about macro markets as usual. The format, we'll discuss a few short-term options trades we've done specifically, a successful one and a failure, or one that's successful so far and one that seems to be failing so far. And we'll just kind of go over our reasoning behind both because people ask a lot about our specific trades we do, and we don't normally talk about it, but we decided that we'll talk about these two macro market trades and talk about the Tesla stock rising fast and Elon's master plan part 3, and all that, and Giga Berlin opening and Q1 delivery numbers and Q&A at the end. So I guess we'll start with the macro market. I mean, normally we talk about the Russia-Ukraine. It seems like it's the same situation as last week, pretty much, just kind of a standstill, or it's close to a standstill. It seems like the macro market absorbed kind of the initial shock of that invasion and took a hit. But in the last week or so, it's really kind of rebounded. What are your thoughts about that, man?
Yeah. I was expecting something of a rebound. I mean, we kind of hinted at this last week, and I'm sure we'll kind of go into some of our trades in a little bit more later. But just with the huge options expiration last Friday, and then the FOMC meeting, and kind of finally having a little bit of, it wasn't necessarily good news coming out of there, but more so just kind of clarity. Like, okay, we've got a 25 basis point hike. We kind of know how to react to that in the short term, and then you just had all that kind of put option getting wiped off the table just with that options expiration. So that caused a lot of the kind of market makers out there to hedge and kind of add some long exposure to their own books. So to me, that seeing a bit of a pop was I don't want to say to be expected, but it seemed like there was a reasonable probability that would happen. I guess what surprised me, or I just wasn't sure how it would pan out, is that it seems to be continuing this week. So, seeing markets continue to go strong yesterday and so far today, that's a really good sign, because, it wasn't very clear to me that would necessarily be the case. So, Of course, it can all kind of unwind at any moment, but it seems to be getting some strong legs underneath. What's your kind of take on where we are right now?
Yeah, I agree. I mean, I think you had found a Spot Gamma, the guy Brian, I can't remember his last name, from Spot
Brent,
Gamma. He did
something.
Brett or something. Yeah, I can't remember, but the Spot Gamma guy, he did an interview with the Contrarian Investor podcast, and you had sent that to me over the weekend, I think, and I listened to it. And that was like, a week, and that was like 10 days ago, I think you sent that to me. And it made sense. And he was basically outlining the case you just made that, look, this quarterly expirations, there's a ton, it's a week until the options expire. And the theta is going to decay quicker and quicker going into the end of the week. And, there's these other Greek letters he talks about, like charm and something else I can't remember. But he made the case, in a nutshell, what he seemed to say is like, this is a quarterly options expiration, number one. So institutions, the institutional money uses quarterly options most of the times. It's much more liquid for them to get large hedges put on, right? And this particular quarterly option is the March 18th options expiry. was very popular for hedging, specifically because of the uncertainty around the interest rate environment, FOMC meeting that week. And so the gist I took away was that this particular week was kind of outlier in terms of how much theta decay there would be on these hedges, and that the market makers on the other side, who are delta neutral, would then have to be buying back the indexes to stay delta neutral as those put hedges were decaying over the course of the week. And that would lead to kind of a rising tide in the market. And so we kind of went with that, and we thought, hey, this makes sense. This seems like, given everything else stays equal, this seems like it could really take place, and there could be a nice rise this week, and so, we put a trade on, we're going to talk about a couple trades, we put on a short-term index option trade for call options on the S&P 500 and the growth stocks, which are ARK Investments, ARKK. So, I think it was at the lows on like Monday or Tuesday we put the trades on both the call options, right?
I think Monday we put most of them on. We added a little bit more on Tuesday morning.
Yeah. And we only used, I think, like 1 or 2% of our funds AUM to put the trade on, because it's highly speculative. Like these super short-term trades that are highly speculative, we don't put on typically with more than like a couple percent of our funds AUM. Just, when we see a calculated risk or a lottery ticket that we think the odds are in our favor on, we'll do that. And this is just an example of one that worked into our favor. And sure enough, I think what it was like, the S&P 500 was around 4,200 when we put it on. We put it on for like a 4,400 strike or something. Is that right, Matt? Something like that?
Yeah, I don't remember exactly where it was when we put it on, but yeah, we had a 4,400 strike on the S&P 500, and then with the ARKK, it was a $65 strike that.
And it was trading at like $57 at the time.
57. Yeah. So pretty deep out of the money for a really short term. I mean, these were week and a half to 2 week out options. So that's like, to be, more than say 2% out of the money on something that short duration is pretty inherently risky. So we knew there was a good chance that these could expire worthless, but we thought
that's why we only put 1 or 2% in. Yeah, but we did the math, and we used the Interactive Brokers Risk Navigator tool, which is tremendous. You can build your own spreadsheet models, of course, but that's very labor intensive. Interactive Brokers has this Risk Navigator tool. Inside it, there's something called a custom scenario. Maybe one day we'll demo it if enough people ask for it. We can kind of demo it as part of our live stream or something. But basically, the custom scenario tool lets you say, okay, if you put these positions on, then in 6 days or whatever, if the price of the underlyings get to this high, how much would those options trades be worth, and so we did the math, and I think if we said if the S&P 500 went up like 5%, we'd make like 10x or more our money or something. And sure enough, that's what happened. And so we did quite well. We took profits along the way. When it was up like 4x, we cut out half our positions end of last week. We just didn't want to go into the weekend with all that risk, and when we were already up 4x. And then I think yesterday we did another half of what was left, and then we have like essentially like a quarter of our initial position is still left, except for the ARKK. We closed all of that already. So, the positions expire tomorrow, and some of it Friday. So we're just going to kind of let that last portion run and see how high the market goes the next couple of days if it continues to go.
So it's up about 10x right now. So we're seeing returns on, as we started taking profits, between 5 and 10x, 4 and 10x, I should say.
Yeah. So maybe it'll average to like 8x if we're lucky, if it goes up a little more or something, which is we're happy with that, right? I mean, that's pretty good for 1 or 2% of AUM to get a quick, return on that. That's in a week. That's pretty good. We're happy with that type of risk when it pays off.
Yeah, and those are the type of asymmetries that we're always looking for, where we think there's a higher probability on a certain event than the market is overall ascribing to. Something, and that's really what I think we're trying to really do with the Accelerated Opportunities Fund, which is the fund that we manage here at Good Soil. So it's a nice kind of boost after how terrible things have been going for growth stocks in general in the last 3 months or so. So it's nice to get a quick win and to be right on a thesis like that too, because it's been so hard to be right on macro, but this is one where really it wasn't just kind of like a gamble. It was looking at some legitimate underlying data and saying, this it seems likely that the delta hedging is going to result in a lot of long index buying, which seems to be exactly what happened.
Yeah, and it felt contrarian too. Sometimes when something feels contrarian, but you feel like you have an edge to go against the herd. At the time, the markets were like capitulating still at week over week, and everyone's like, "When's this? You don't want to catch a falling knife. Market's tank." So it just felt like very kind of contrarian to put on that trade at the time. And I think when we put the trade on the first day, we were losing a little bit of money, and then we put another like 0.5% of our fund into a little more of the contracts. But we were losing money the first day, but the second and third and fourth, it kept going up after that. So that was like an example of our short-term positive trade that worked out in our favor. And then an example of a macro market. What's that, Matt?
I was just going to jump in and say maybe give an update too, because we did talk about another trade that we actually closed out. So right when the Russia war started, we talked about a kind of a hedge with kind of a deep out of the money short-term put that we put in place, just in the event that like a nuke went off and markets tanked 30% overnight. As the whole Ukraine situation kind of continued, and Emmet and I, you and I both got more familiar with it. I think maybe it was a week or two after we put that on, and it was a 1 month out option that we bought. We kind of realized or came to believe that the risk of like an imminent nuclear strike was probably pretty low. So we closed that out. It was probably like a week before we put on this new trade. Was it like 2 weeks ago, something like that?
I think
so. Just to kind of give some clarity that we weren't leaving our short put on while we kind of we're betting the opposite direction on these index calls.
Yeah, and we closed out that put after the market had gone down a bit, but because the market didn't go down quickly, like our hedge was kind of intended, hedging against. I think we closed it out for like a slight loss, maybe, but not a big loss. But if the market hadn't dropped at all, we'd have lost a lot more in those few weeks we had that trade on. We had it on for a week or two, I think, maybe longer. So that worked out, but the losing index, that was sort of like an even money trade hedge that didn't work out and didn't lose much on that at least. But the trade that it will bring up that we are losing on so far is also about 2 weeks ago or a week and a half ago, separate reasoning versus the short SPX call option, the short-term SPX call options we bought was something called an iron condor. We just felt like after we closed kind of our hedges, we thought like maybe this is going to be a range-bound market for the most part now that we've gone down so much. There's so much volatility. How can we make money on volatility? And the idea of the iron condor kind of came to mind. And on the NASDAQ, we bought or we sold some iron condors for credit, and the credit was equal to, I don't know, what was like 4 or 5% of our funds AUM, and the duration of the iron condor was about a month. But worst case, iron condor is like selling a call spread and selling a put spread at the same time, and you're kind of locking in profit as long as it stays within this range. And I think it was like up or down 5% for the NASDAQ is what our range was from where that we put the trade on.
Yeah.
So as long as NASDAQ stayed in that 10% range, up or down 5% from that point, we would have collected 4% premium. But worst case, if the NASDAQ went up like 10% or if it went down 10%, then we would lose like 10% of our funds AUM or something like that. So you could lose, more than you would gain. The idea of the iron condor is most of the time it stays in the range and you start collecting that premium. And we felt like the NASDAQ, was kind of near a low already. We didn't think it could go much lower. And we felt like if it was going to go up above 5%, in the next month, then at least the rest of our portfolio would benefit more so than the extra 5 or 10% of that we'd lose from our fund losing out on that iron condor trade. So we just felt like it was a good risk reward for our fund, because if the market traded sideways for a while, we could start collecting 4 or 5% a month just on selling kind of an iron condor, and so that trade has worked against us because the market's gone up. And so we're in the hole, I don't know, an extra 2 or 3%, just because the market the NASDAQ rose like 5 or 6% since we put the trade on. So it's kind of at the money of where the lower end of the call spread is at. So as long as if the NASDAQ stays flat from here until I think it expires April 8th, if the NASDAQ were to stay flat from here till April 8th, we'd make the full amount of money. But for any amount the Nasdaq goes up from here, we start losing a little bit of money on this trade, I think, right, Matt?
Yeah, so like essentially, if it expired right now today, we would make almost all the money on the entire spread. I think it's very slightly in the money, so you lose a small percentage. But right
That's
now,
probably not going to happen. Yeah, there's a good chance it could go up another 5%. Yeah,
yeah, it could go up another 5%, but if it goes down another 5%, then we collect the
we
whole
make
premium
money
too. So we're kind of playing with theta decay a little bit here too. We can start making money even if it just kind of stays sideways. But like you said, I mean, it's something of a natural hedge against the rest of our portfolio. And another one of the reasons that we tried this was because the implied volatility in general is just so high right now. Or especially it was even higher like two weeks ago or 3 weeks ago when we put this on. And you know, when the market is kind of giving you that opportunity, calls were incredibly expensive. And so the idea of trying to generate a little bit of premium in the current market when there's just so much fear and volatility seems like the right move to make, as long as it's kind of within a controlled fashion, like it is in our case with the hedge that we have with the rest of the portfolio. So I still like the trade, honestly. I mean, it could well end up going against us a little bit, but even if it does, it will be, you know, more than offset by how the rest of the portfolio is performing.
Yeah, our portfolio has already performed very well this month so far for a number of reasons, but yeah, I mean, right now we're down 50% on this trade. If we were to close it out immediately, we're down like 60% if we were to close it out immediately, like this minute. You know, we'd lose. You know, if we use like 2% of our funds AUM, we'd lose 3% of our fund. You know, if that's how much we could have collected, we'll lose 3. You know, or no, we'll lose 1% of our fund. I think of our funds AUM if we were to close it out immediately, something like that. So basically the strike on this is the call spread. The lower leg of the call spread is 14,500, and we're just above that right now, around 14,600 or 14,577 on my delayed quote for the Nasdaq index quote. And the lower legs, you know, the lower leg, the put, you know, leg is 12,200. So if it stays, or 12,500, I'm sorry. So if it stays between 12,500 and 14,500, you know, by April 8th, then we collect the entire premium. And right now it's at the upper end of that range. And the call spread we sold was 14,750. So the most we'd lose is $250 times the incredibly high multiple on these index options that we're trading. So we collected like $90 credit. So, you know, if it goes above 14,590, which is about where it's at now, we start losing money if it expires above that price, something like that. So anyway, it's kind of complicated. Some people probably understood it. Some people might not. You can ask us questions. We're recording this. We'll go over questions. We'll look at the YouTube comments in particular afterwards and try to respond to them to help clarify. I know it's confusing. Sorry about that. But we'll move on. Tesla. Let's move on to Tesla. The stock. Wow. Rising fast. What are we at this moment? 946.66. Someone in the comments said Elon is speaking right now, or he was speaking earlier this morning. I'm not sure if he's on right now, but I did see a little speech he did earlier this morning. The Berlin factory is finally officially approved and open. This is like something I thought I might not ever hear. Now it's happening. Tesla stock is rising. Are they connected? Do you think the Tesla stock is rising extra fast because of that, Matt? Or do you think it's just kind of rising with the indexes?
I think it's probably more to do with the indexes, if I had to say, but I do think some of the downward move to me did seem like it was probably amplified by uncertainty around Berlin. I mean, even 3 weeks ago, there was a lot of uncertainty around kind of what was needed for final approval, and there were a lot of people basically saying if it gets done before the end of Q2, then that would be a victory. So that was kind of where I had my mindset, is like, as long as it's up and running by May, I'll be like not happy, but like not sad.
Yeah.
So to me, it seemed like all the fear going on in the macro markets, plus that being delayed, and that seems like that could have contributed to it falling as low as it did, because it got down below 760, which is, in my mind, like insane.
Yeah, it dipped.
Ended up being okay for me. I added a little bit to my personal account at like 759, I think it was, or something like that. So I got like pure luck, really, but I kind of timed the market just right on that one.
Yeah, nice.
But Yeah, to me, it seems like, okay, markets are rising overall. I'm sure, Tesla's probably benefiting from a little bit more clarity around Berlin. I know Dan Ives had a nice note out this morning about some of the upside potential that Berlin offers, and he's got his $1,400 price target, I think. So yeah, I think that it helps to kind of remove uncertainty. But it seems like this is kind of like a broader macro. Like everything on my watch list is green today, basically. So
Yeah.
it's hard
Yeah,
to say
macro.
with Tesla up, what percentage is this today?
Almost
2.73%.
3%. Yeah.
Yeah. So
But
it's,
Tesla was up yesterday, despite most of the market being down most of the day. Tesla was
yeah.
still kind of staying strong. It was almost flat at one point, but it didn't ever go red. And the whole market was kind of, I think Nasdaq was down between 1% and 2% at one point yesterday, but Tesla was still up. So maybe there was a little bit of, um, people getting back into Tesla because of this Berlin thing is officially on. I don't know. It's maybe a slight mix, but mostly macro headwind or tailwinds are I think carrying Tesla forward. I agree, Matt. I think most of this is macro tailwinds.
Yeah, but it definitely good news. So how are you thinking about this opening, in terms of like a positive catalyst going forward? I mean, I know you're not doing a lot of the detailed kind of, delivery estimates and that sort of thing, but do you think we could have a delivery surprise maybe in Q2 or something like that? Or is it just the sort of thing that's kind of like the removal of a bad, or is it a catalyst for more good than maybe the market is even expecting?
I think the delivery surprise will be Q3 and or Q4. I think Q2 is going to be like kind of a steady, careful, quality control ramp is my guess, and maybe Q3 too. But if not, then Q3 or Q4 would be kind of like some nice upside, 5,000 a week almost produced. Maybe that'll be Q4, but I could see 500,000 deliveries plus for Q3 and Q4. I mean, that's pretty crazy. Definitely Q4 in my mind. High likelihood Q4 is going to be 500,000, maybe 600,000 deliveries for the year, or for the quarter. That would be insane if they got that high, just because China's been Fremont's ramping up. They said they could double production or go up 50% production. They reaffirmed that in a recent investor meeting. They reaffirmed, that Fremont and Shanghai alone, current factories are going to comfortably exceed 50% growth, and then you add on Berlin and Austin kind of ramping up, and it'll be a nice, it'll be a good end of year, I think, for deliveries. Now the stock, the business will look great. The stock, how it reacts to the business is another thing. Like from 2013 and 2018, the business was booming at certain quarters. You'd be like, oh wow, we're getting to 20,000 Model S delivers a quarter versus 5,000 a year ago, or whatever it was. It was seemed like it was incredible business execution, but the stock was still very range bound during that time. So I can't say for sure the stock is going to suddenly go up, 50 or 100% just because deliveries are going up 50 or 100%. So that's something that people need to be careful of. It very might, but I think the thing that most likely carries the stock forward is full self-driving, if and when that gets, mass marketed, like put out to the masses and monetized more heavily. In terms of, we look at the business execution in terms of ramping up deliveries as kind of like a backstop to prevent the stock from crashing too low. But it's hard to say when the execution of ramping up manufacturing results in if that alone results in the stock price appreciating another, from a $1 trillion market cap to $2 trillion market cap company. What are your thoughts, Matt?
Yeah, I mean, I think the biggest catalyst, like you were saying, is FSD, but that's probably going to take at least 12 months, I think, to make its way through, financials. So I kind of view that as something to start taking a little bit more seriously, maybe second half of the year. Although I do think an underrated potential catalyst, which I tweeted about recently, is the fact that they're prioritizing deliveries that have FSD. So if you just order, say, a base Model 3 or even in a dual motor or whatever, you may get delivery, say, in September or something like that. But if you add full self-driving, then you can get your vehicle in May. So what that's going to do, because the backlog is so large, is and this is a change. They didn't used to do this, but you're going to have a lot more a higher percentage of overall deliveries in Q2 will have full self-driving compared to previous periods. And if their backlog is big enough, or if full self-driving improves to the point where take rate is increasing in the future, then this could be a sustained advantage that can go, beyond Q2. It can go, well into Q3 and Q4 and beyond. And take rate was already been so low that my sense is we're probably pretty near the bottom right now. I'm guessing we're around 10% global average take rate.
You think that's global average, or you think that's U.S. average? U.S. is higher,
I think that's
right?
global. U.S. is probably like 18 to 20%. I would think.
Okay.
Based on,
and Matt does some
everything.
pretty careful analysis. You've done some careful analysis on this. I've seen some of your analysis even before we started working together. It's pretty pretty meticulous.
It's something I've spent a lot of time digging into, the 10Qs and the 10Ks, and like trying to piece together information, and like at what rate is the deferred revenue balance increasing, and like backing off the amount of kind of inferred full self-driving deliveries. And so there's a lot of work that goes into this. I'm not making these up. I don't have the exact numbers, obviously, but I think I'm pretty close. But anyway, I mean, that's a potentially huge catalyst for margins, and it's one that they kind of hinted at on the Q1 call, where they're saying the full self-driving is, the implications for their financial performance is going to be nutty. They said something to that effect.
Yeah.
And if you start, running some numbers and say like, oh, let's assume they get to 20% take rate, and let's assume full self-driving is like $15,000, and by the way, like right now it's only about 50% recognizable, so they're not even getting the full benefit of full self-driving running through their current financials, because so much of it goes into deferred revenue. So if you say, all right, it's 100% recognizable by Q3, or at least like 95%, it won't be 100%, but mostly recognizable, and you've got a higher take rate, and it's at a higher price. And by the way, at that point, you're going to have Berlin and Austin starting to ramp up, and presumably margins in general are going to be higher, because you've got, these price increases are going to be, taking effect right around then. So like you start adding up all these, you're like, okay, there's like an extra $10,000 of margin per car here. There's like an extra $3,000.
Yeah.
Like you just start.
It's like the opposite. It's the opposite of a death by 1,000 cuts, I feel like. I don't know what the opposite is, it's like that, but it's the opposite of
like
that. If you're short,
no
it's
single,
death by 1,000 cuts.
Exactly. Yeah. It's like, yeah, there's probably some creative way you could come up with a life by 1,000, I don't know, gifts or something like that. But it's like that though. Like just like every single thing, you're like, yeah, that's a pretty big catalyst. Now, like obviously there's going to be some cost increases on like raw materials and that sort of thing. But as I'm like doing the financial modeling, I'm having a harder and harder time, not just like increasing all my estimates across the board, just because there's so much good news coming right now.
Yeah, absolutely. I see someone in the comment section said Gordon Johnson did a reaction video on the Berlin opening 5 hours ago. Probably best entertainment of the day, from Mike at the YouTube live comments. I wonder, I would love to search for that later. Maybe Mike, you can post the link in the comment section or somewhere. I want to watch that later. I like hearing, I think Gordon Johnson must really believe, like somehow he was brainwashed to really believe what he's saying. I don't think he's like intentionally lying. So I want to hear these people. I try to get in the mind of these people that I highly disagree with, to try to empathize and understand where they're coming from, just to help my own conviction of that stuff. Whatever it is in life, if there's something I really disagree with, I want to find the people I disagree with and try to just get in their mind and empathize, just whether it's to build my own conviction on my position, or maybe I find some doubts. But I for entertainment reason, at least it'll be fun. I think we're beyond that with Tesla at this point, but it's still fun to kind of get in the mind of Gordon Johnson, try to understand where he's coming from, what logic he's trying to put together.
Some of the bears, I would agree. I think Gordon is a special case. There's a lot of kind of murky relations between him and was it Chanos, I think.
Yes, that's true. That's true.
And like his numbers are like kind of intentionally deceitful. Like if you looked at his DCF model that he posted, he assumed, was it like 2028? Like everything just got cut in half for no reason whatsoever, and then he used that as his terminal value. So like that's like a incredibly like manipulative way where like he knows what he's doing. He's a good enough financial analyst to know that that's deceptive. So
some people are saying in the comments he's a paid actor, which essentially is what you're saying. He's sort of a paid actor by the shorts in some way. It's possible. Doesn't think Berlin is opening according to what he's saying. That can't be. I don't know.
Yeah, I don't know. I think there are some better bears to listen to than Gordon, because I really just I don't know. for most people, I would agree with your approach of like,
Mhm.
just try to get in their head and try to give their arguments the benefit of the doubt. But I think
Yeah,
his
and I try
is
to do
so
that with Gordon,
ridiculous.
and usually I think it's ridiculous. But he does speak. Maybe I'll just come to the same conclusion that yeah, he must be, literally crazy, or just doesn't, actually like spreading wrong misinformation on purpose in a way. So um, yeah, I want to listen to it though. So I saw someone put the opposite of death by 1,000 cuts. They put orgasm from 1,000 kisses. That's funny. Oh man. And someone else put in the comments about Pelosi. Where they put it? I saw the news about Pelosi exercising some Tesla options, reporting her exercised Tesla options. Did you see that in the news?
No, did she actually take delivery of the shares? Is that what happened?
Yeah. So someone put in the comments, I can't remember see where it is, but she took delivery of a bunch of shares in the money, and I had a friend like text me about it and was like, "What's going on with this? Is she stealing your thunder or something?" And I was like, maybe she's a better options trader than me. She's like maybe like Nancy Pelosi. It reminded me of that scene in Star Wars where Luke sees Darth Vader. And he's like, "I am your father." So maybe like Nancy Pelosi is really like my mother or something. She's like doing these crazy options trades. Like evil congresswoman. I don't know. I don't know if she's evil or not, but a lot of politicians just don't have, you just don't think highly of, especially the ones that are 90 years old still doing it. Oh my
Yeah, which
gosh.
is most of them, it seems right now. It's
Yeah,
like,
mine. But why do they still do it? I mean, there's something corrupt about that. I don't know. So, anyway, and doing Tesla trades.
oh, I
So,
hear someone else put in the comments that she has Roblox options as well. So that's
oh no,
if you
she is
kind
my
of
mom. Maybe she's my Darth Vader mom version. Oh my gosh, who am I related to? Really, my mom will tell me one day, Emmett, you were actually adopted from Nancy Pelosi or something. That'd be crazy. Oh my gosh. So I think I heard that she has Roblox options. I heard that. Yeah. Or maybe she follows our podcast. I don't know. Who knows? I apologize, Nancy, if you're watching. We're just having fun. Uh, all right, so let's go on to, I guess, the Q&A, right? Where we talked about a lot of stuff. Is there anything else Tesla related? I mean, Elon's master plan part 3. Yes. How can we forget?
oh yeah,
What
yeah,
do
we should
you
talk about that.
master plan part 3? I put out a Twitter tweet, whatever, the other day that just came to me, and it got sort of popular, but it really makes sense. Like, it's all about colonizing Mars to Elon and
Yeah.
ensuring humans' consciousness goes on if something happens at Earth and the ships stop coming from Earth to Mars, right? And so, how do you get there from A to B to ensure that? And you got to build the colony on Mars, right? You got to build a self-sustaining, and it's all about that with SpaceX. And eventually, he's going to tie in Tesla to that. SpaceX will buy Tesla bots. Boring Company will be tied in because you'll dig underground tunnels in Mars for humans to, live in for a while Mars needs to be terraformed and such. And, so I put out something saying like, I think, 20 years from now, there'll be tons of Tesla bots just going over to Mars, preparing the colonies for us with maybe a few humans kind of there to kind of help coordinate things that the bots can't do all by themselves, but maybe a human needs to do a special fix once in a while or just verify certain things. Maybe there's just some adventure seekers out there. I don't know, but um, I think it'll be many more Tesla bots versus humans on Mars 20 years, 30 years from now, as they kind of prepare whether it's a tunneling system with the Boring Company machines, for habitats underground for humans to move to, or, just making settlements on the surface of Mars in preparation of Mars maybe getting terraformed. I think it could take a long time for Mars to get terraformed with today's technology, but maybe by then there'll be some ideas to kind of expedite the terraforming of Mars to an atmosphere that's more inhabitable for humans. I know Elon had mentioned nuking the poles a couple times. I don't know. I'm not a nuclear physicist, or I'm not a atmospheric, scientist, so I don't know for sure, but I'm sure Elon's thought deeply about it. So maybe there'll be some faster ways to terraform Mars where it doesn't take hundreds of years, but maybe it can take 1 or 2 decades or something. Who knows? So maybe they'll be preparing habitats on the surface of Mars in advance of that too, and we can each buy a a plot or a territory on Mars and a little army of bots to kind of build it the way we want it to be built and kept, and we can control it from Earth to some degree with the Starlink internet service connecting the bots to us. So that's sort of my theory of what the future could be, like a cool sci-fi book written now, but maybe the future would be something like that. And maybe the Master Plan Part 3 ties that all together about how, like, not just sustaining Earth, maybe that's Master Plan Part 4. Maybe I'm going too far. I don't know. But Master Plan Part 3, he's going to tie in, all the companies, he said yesterday in a tweet. What are your thoughts, Matt?
Yeah, I was kind of surprised that he did include like Boring Company and SpaceX, because it's like, those are not necessarily, directly related to Tesla. So the fact that they would be in Tesla's, master plan, I thought was really interesting. So whether it would be something formal, because I've seen some speculation that it could be like the first steps towards an X holding company sort of thing. I'm a little bit skeptical of that. I think, there's enough kind of interdependence of, like you were saying, sending, like, having Tesla support the Mars mission as well via Tesla bots. To me, that makes all sorts of sense. I mean, and I think it could be a lot quicker than say, 20 years. Elon said he wants humans there by 2029, I think. And then you think about the fact that there's these, 2-year windows where you can send people to Mars. Mm-hmm. So, the rocket basically up and running, the Starship up and running, I don't know, say 2025 or so. I don't know when the actual next window is available. But then you pack it full of like first generation Tesla bots and some other supplies or whatever. You could have them working in the harsh radiation of the atmosphere of Mars, which humans can't really do for extended periods of time. And they could make a kind of preliminary habitat so that by 5 years later, you could have actual humans going there and having something of a base to kind of start off with. So to me, that seems like that could be a next step. But I think that the thing that I get a little bit more excited about, that gets me excited as like a human being, and
yes,
kind of like the exciting future that we have. But in terms of like catalyst for the stock and being excited as an investor, sure, that would be nice because it's a nice revenue source. But I think there's a lot more like huge value creation opportunities coming out of the real world AI applications. And that's something that I have a hard time kind of imagining what those will be and then trying to ascribe a value to them. Because it's like, well, I presume you could use vision-based AI for lots of other things, but I don't know what those would be or how realistic it is. But, Tesla could like actually tackle those tasks. So I think once he kind of spells out some of the AI applications in a little bit more detail, it will then be a little bit easier to say, oh, okay, here's the opportunity they're trying to address, and maybe here's the kind of margin potential they could have from that. So I'm sure even then it will be a bit of guesswork, but like it could very well be the case where we realize after the Master Plan Part 3 that there's like a near term 10x opportunity, maybe not super near term, but I could imagine reading through the Master Plan Part 3 and being like, oh, yeah, I didn't realize that AI could be used for this, and it could do that much more cheaply than whatever the current way of doing, X is. And that could be like a potential major catalyst in a shorter period of time than we may be able to comprehend just from, kind of thinking like AI is huge. It's just like, it's one of those buzzwords, right? But I do think that's the one that I'm pretty excited about, just to be able to get a little bit more clarity. I don't expect the market to react to it at all.
No, probably not. Probably not. Yeah, market won't react to it, but all of us like Tesla nerds and geeks will love it and eat it up. And just like, I think when they reveal the Tesla bot, I think it'll be similar to like AI Day or Battery Day. The market might even it might even sell off on the rumor of that or something, 5% or something, but we'll all be super excited about it when we see the first prototype. Hopefully later this year.
I want to see Franz throw a ball bearing at it and see if it can like get out of the way or something.
Catches it. Maybe it catches it and throws it back.
Throws it back at Franz.
Yeah, that'd be pretty cool. Yeah. So I'm excited too, and I think the Tesla bot and everything that the Boring Company Tesla bot can do, together, it's basically like Unchained on Mars. Like there's no regulations or like legal restrictions on Mars. It's like free for all, and SpaceX will be one of the only places sending resources there, so they'll be able to do whatever they want. And on Earth here, you know, you have all kinds of regulations, rules, different countries. Like, look how long it took Giga Berlin. They got to get past bats and plant, you know, all this crazy stuff. They can't even build tunnels under, like, from airports to cities without getting a whole bunch of regulations and laws passed. You know, they got to cut through tons of red tape to do anything that changes the world. That's too much red tape. It's almost like suffocating. But on Mars, I think Elon is super excited because it's like he can really put the economy, whatever economy he wants together on Mars, to just have no bounds, no red tape restrictions, you know, and it's just going to be incredible 50 years from now. I mean, 20 or 30 years, it'll really get ramped up, I think, but 50 years from now, you'll see some crazy results maybe. So hopefully I'll be still alive at 92 years old then to kind of see what happens 50 years from now, and we'll see. Anyways, exciting. Let's go on to Q&A. We've talked a lot about this stuff, a lot of questions. We'll try to go a few minutes after 10:30 Pacific time, because we kind of talked a long time. All right, first question from Evan Glansman on YouTube. Has Good Soil ever looked at Desktop Metal as a possible investment? I have a new appreciation for companies looking to improve manufacturing processes after being exposed to Tesla. I've never looked at Desktop Metal. I've heard of that company. I've heard a couple people talk about it, but I don't even know what they do necessarily. I feel like I heard about it once or twice, but I don't remember what they do. Matt, you know anything about them?
No, I actually don't know anything about them. So I'd love to comment a little bit, but I think it's probably best not to comment too much if you're just actually not familiar with an investment. I will say we probably have a newfound appreciation of commodities, though, and so we're kind of looking at commodity space in general, as volatile as that's been lately.
Yeah. Hopefully we'll have some kind of research on a stock we've kind of been flirting with that's grown to be a bigger portion of our portfolio in that kind of sector, but that's to come maybe next month sometime. From Redcrumb1 on Twitter, any shorter term shares option plays you are doing right now? That's a question I think we talked about. For anyone listening now who missed the first 5 or 10 minutes of us talking, we talked kind of extensively in detail about a couple of index options trades. We did one that's sort of failing at the moment, but also one that was successful, and we've taken a bunch of gains, and we're still letting part of it run to see how much more successful it can become. So we talked in detail about that. This is recorded on Twitter Spaces and our YouTube live channel, so you can go back at the end and listen to the first 10 minutes of our chat about that. From J60931656 on Twitter, do you guys disclose your full portfolio anywhere, and do you have any exposure to crypto? We don't disclose our full portfolio. We do talk about like currently there's 4 names that we are, you know, heavy on, that we talk about: Roblox, Lemonade, Rocket Lab, and Tesla, of course, is by far our highest conviction name, our highest name. And we talk about those. And I just mentioned there's maybe another name we'll talk about soon when we're comfortable with our research on it. But we do disclose our performance on our website. We are, I think it's called the 506C fund. So we are allowed to disclose our performance to the public, unlike most hedge funds that are not allowed to disclose their performance to the public. And goodsoilinvestmentmanagement.com is our website if you want to see our performance. We disclose some trades in our I think our appendix section of our deck and such. If you want to request that, you can on our website. But yeah, we don't disclose the full portfolio.
Yeah, and the reason for that is partly, we don't want people following us blindly into these trades, because people have different risk rewards tolerance. So if we were, live streaming some of the, failed trades we've made over the time, and people followed us into those, I think that would be pretty bad. And we also want to, give the maximum benefit to our investors and let them kind of receive the full benefit of our trades.
That's true. Yeah. From Handyman IRD on YouTube, do you worry about Elon keeping on teasing President Putin for a fight? What do you think Elon's reasons? Is it more for PR purposes? Yeah, we did talk about that a bit last week. A lot of people seem to disagree with us, thinking that Elon was just teasing, and I don't know. I mean, Elon did say I'm dead serious at one point, but maybe he changed his mind to kind of make it a humorous thing after that. But I think initially he was serious, because he was so upset at that moment, maybe for what was going on in Ukraine. And then he kind of, I don't know, turned it into kind of a humorous joke with, so Elon will be Elon. He just speaks his mind, and he can change his emotions and mind as anyone does. And I am a little worried about Elon being on the radar of Russia's kind of hit lists with that, and the Starlink, being seen as a way to like aid Ukraine. They're just trying to give internet. I feel like Elon could just maybe he could do is like drop a bunch of Starlinks in Russia too, so that people in Russia can get internet access without, to satellites directly without firewalls, but at least he's showing like, hey, look, I'm fair to everyone. I want the Russian people to get internet access freely and the Ukrainian people, so maybe that would be kind of cool if he ever did something like that. But I think right now there's some people that think he's like specifically helping the Ukrainian military only or something. And I'm not sure that's his intention. I think his intention is just try to make sure Ukraine, everyone, including, the government and the people, have access to the internet. What do you think, Matt?
Yeah, no, I agree. I mean, I do think he was serious when he initially tweeted it out. I mean, it did seem like he was having some fun with it afterwards, like changed his name to Elon Musk after that.
Yeah.
That pretty funny kind of invitation came for him to do some training. But I think that was one of those things that was like ill-advised, but at the same time, I'd much rather have Elon being himself than like some robot CEO like Mary Barra who never tells you what she actually thinks and always kind of like toes the line. And it's like Mary Barra would tell you like she doesn't even need to sleep. Like she sleeps on she's just like so not human or personable. It's like I'd rather have someone kind of warts and all be their actual self and say what they mean so you can trust them than somebody who's like always sounds like pre-recorded and rehearsed. And so there's downsides to that, and I think tweets like this are one of the downsides.
Yeah. Question: how do you think the market would react to a working version of Optimus shown later this year? From Evan Glansman on YouTube. So we did mention this earlier. I mean, I think the market, I think it might be one of those buying the rumor, selling the news events, sort of like Tesla AI Day or Tesla Battery Day, or some of the reveals of some of their cars, like the Model 3 was sort of, or maybe not the Model 3, but the Model Y was sort of like that, and the Cybertruck sort of like that. The stock was kind of creeping up leading to the event, and then it sold off, 5 or 10 or 20% afterwards. Some of those cases. So it could be something like that, where the stock kind of creeps up a few percent, and then just sells off right afterwards. Because I think the prototype of Optimus Prime, will be impressive to us nerds, but I don't think like us Tesla nerds, but I don't think Wall Street Tesla, analysts will be able to compute that. It'll break their minds and their spreadsheets. They will have no idea what to do with it, in my opinion. And they're just going to say, oh, it's a circus, or, they'll just interpret it as not a revenue. They won't be able to interpret it as a way to increase the bottom line. They won't know how to do that. And so that's my guess. ARK Investment will figure out a way to do it, but I don't think traditional auto analysts will have any idea what to do with it. What do you think, Matt?
No, I don't think so either. I mean, I was actually thinking also about the Elon's comments about this Masterplan 3 will about achieving extreme scale. And I'm already thinking like Wall Street analysts are probably going to take that in the worst possible way, where they're going to say, oh no, they're going to spend so much on CapEx to get to this extreme scale, and then their margins are going to get tight down to zero because they have so much scale. Like I'm almost certain that's the way like analysts are going to run with this, because it's like anytime you're deploying CapEx, you need to like have some ROI if you're an analyst, and you're not going to have an ROI higher than like 9%, say. Because that's just normal. So they're not going to give Tesla any credit for like AI or like any other kind of higher margins either on the manufacturing side or on the software side. So I think Optimus will probably be the same way. It'll be like, oh, we plan to make 10 million Optimus a year, and we're announcing a new plant in wherever to build this, and it's going to be like $5 billion. And the analysts are going to be like, oh no, like that's money losing. And like, so I just, even though Tesla has this amazing track record of like achieving these like unbelievable results, I kind of think that analysts are not going to digest it in the right way.
Yeah, I agree.
So I would not expect that this would be any sort of catalyst in this year.
Yeah. So bold down AH says Mary Barra might be a Tesla bot from the future, come back in time to lead us lead the US into the EV revolution.
That is Mary Barra does seem like a Tesla bot.
Yeah, so does
She,
Biden.
she
President Biden looks like a Tesla bot a little bit, a Tesla bot that needs needs some battery juice or something. I don't know. A lot of
maybe
politicians and CEOs look like bots these days. I don't know.
saying the word Tesla was like the self-destruct sequence for those bots, and so maybe that's why they avoided it for so long.
Yeah, that was the
They had
code
to
word that kind of
rechange
makes
the
them all
software so
malfunction.
that yeah.
Yeah, yeah, yeah. All right, let's see here. From Arius Ike, will Tesla ever get involved in other forms of energy generation like wind or nuclear, fission or developing fusion? What do you think about that, Matt?
Yeah,
That's
I
your
could take that one. I,
specialty.
I I think the answer on that is no. And the reason, like on the wind side, it has taken like probably a good 20 years to get the wind technology as good as it is right now. And so like GE and um, a lot of the other there's a lot of like European and there's even some Chinese manufacturers that have just spent years like making very minute adjustments to like the ratios in the gearboxes or to the
Hmm.
the blade designs, and that is like very highly protected intellectual property.
Hmm.
And it's also like money losing, like those wind turbines at a loss or at break even, and then they make up for it with these long-term service agreements where they agree to kind of maintain them over a 10 or 20 year, 10 or 15 year usually life cycle. um, so that's really how they generate money. But for Tesla, like even though they got amazing engineers or whatever, like you kind of need to stand on the shoulders of the people who generated the technology before you. um, and with Tesla solar, like they've got something a little bit unique, and it's frankly a much more simple technology than wind. Fission
Hmm.
and fusion are, I would say, even at odds with Tesla's mission a little bit, just because they're not saying they're not clean or anything like that, but Tesla's very focused on distributed generation, so meaning like small generation that can go in residential applications, um, and kind of like scalable that way. Um, and I think you can, if they were to try to build out like a wind plant, that's like a 8 year roughly a process from developing, like getting all the land rights to like getting all the interconnection agreements that you need, and then it's like a 1 year plus construction project process. And frankly, the margins suck, and you've got huge commodity risk. So I think it's actually a pretty bad business to get into centralized generation of any type, wind or nuclear. So I
Hmm.
don't think Tesla will go that route. But where you can actually make some money is on the distributed side and on solar in particular. I mean, like the Elon always says, the best part is no part, and solar is by far the simplest because you don't have like
Yes,
a
it's already
rotor
there.
going around magnets,
Yeah,
spinning that you need to like
yeah,
grease all these bearings and everything. Um,
yeah,
like the cost decline potential for solar is still a lot higher than for any other form in my mind. So no, I
yeah.
don't think I would be very shocked if Tesla does go down the road of any of these other ones, because the maintenance is the lowest, the cost potential is the lowest. You can put it anywhere, and it's already kind of in their wheelhouse. They have some technology advantage on it.
Yeah, I remember years ago, it must have been 2014 or 13 or something like that. He gave the presentation, or they had their Powerwall, their first generation Powerwall product unveil, and Elon gave a presentation about the sun and it being the biggest nuclear fusion reactor for us in this, just in the sky, waiting for us to use, and it just made so much sense the way he it's so simple to think about it in the way he does. I don't know why more people don't accept it, and they want to create all these other types of they just want to. I feel like the simplest is the best usually, and Elon has a interest. He has a unique talent for simplifying reality in ways that other people seem to complicate.
Yeah, I think people forget like how much worse it is to have moving parts in any system. But like I
Yeah.
can tell you from managing wind farms, like wind turbines break down all the time. Like you just need one thing to go wrong, whether it's like an auxiliary oil pump or whether
Oh,
like it's a
geez.
blade. Like blades get hit by lightning all the time.
Yeah.
Or your gearboxes, or you just need downtime for like to change out oil. And so like there's
Yeah.
all these things that people don't think
Maintenance.
about, that like then
Yeah.
you've got to have a crew on standby. And so then like you start adding all these costs, and you're like, okay, well, it's actually much cheaper to operate solar. So if you can get the cost down close to
Yeah.
parity, then it's going to be like a slam dunk solar over pretty much anything.
Yeah.
So I've got very strong opinions on that. Sorry to go
No,
so
it's
long
good.
into that question.
Yeah. From Terrence on YouTube, do you both foresee a market correction to recent lows in the next 1 to 2 months? Or do you reckon we have already bottomed at the start of the Russia-Ukraine conflict, for example? Thanks. I think, I think I put out a tweet last week saying, like, if we can hold some kind of market movement, sideways or upwards without a crash after the Fed meeting last week, that I thought the worst of the volatility storm is kind of behind us. I kind of think that, and we've been talking for weeks. Every week we're like, maybe we're close to the bottom. Maybe we're close to the bottom. The market kept going down, and it was like it had been going down. Like growth in tech stocks in particular have been going down for like 3 months, like very consistently almost. It's like, and I think that was a major, whether you want to call it a bubble popping or valuation just change for growth tech stocks. I think that's more the latter. When things settle, people will look at valuations of growth and tech stocks a little differently versus, last year. So I think that kind of correction or downward move hopefully is over, knock on wood. I mean, sure, we could still have a 5% down move on some kind of terrible news, but in my mind, and Matt and I have talked about it briefly yesterday, we don't think the risk for like a 10% plus downward move in the market is high at all anymore, unless there's some new unexpected geopolitical event. So, I think if there's no unexpected kind of geopolitical event or macro market event that's not already priced into the market or already been talked about, then inflation's already being talked about, interest rates going up is being talked about, Russia Ukraine war dragging out and becoming like, a mass tragedy for months to come is kind of already been talked about and sort of priced in. And it's a terrible tragedy, but yeah, it doesn't seem like to us that there's a huge, that maybe we've hit the low. That's what it feels like to us, I think. Right, Matt?
Yeah, I think so. I mean, this could change. I mean, for example, if like 6 months from now, nothing has changed on the ground, and like Ukraine is just continue to be like hammered, and the humanitarian crisis is even worse, and there's food shortages, and oil's still above
Commodities issues, more
$120, then like
inflation. Yeah.
if those trends don't change, then I think we could have more of a potential down move later on this year. But I think at least in the medium to short term, it does seem like it would surprise me if we, let's say next week or next month, we're down, 10-20% from where we are right now. That would be surprise me. Not that it couldn't happen, but my
No.
take on where we are is, and not investment advice, but
Yeah.
as I'm thinking about everything right now.
Tesla is at a new high of the day, 953, just touched. Oh my goodness. Wow.
953. Wow.
Yeah. New high of the day. New high. We haven't seen 950 plus for a long time, it feels like. It was probably just a month ago, but it feels like it was forever.
Well, it's
Yeah.
so we were close to 1200 in January, like January 4th or whatever, right? It's
Yeah.
it kind of crazy how low it came so fast, and the recovery is pretty high as well.
Yeah, I mean, ARK
predictable.
ARKK is only back to 66 still. I mean, that's much higher than it was a week ago at 56, but its 52-week high was, it was up to 131, so it's still half of what it was at its all-time high. Tesla is way above, half of what its all-time high was like is like $620 or something like that, $625. So it's way above half of it. So it really speaks highly to how strong and how good Tesla's business and people are buying the stock comparatively to other growth tech stocks. Like Tesla is really strong in this market. I mean, I'm glad it's our highest conviction name, and we have, we talk about it for a big reason. We're very convicted on it. So I would see if there's a time where ARKK gets back to like $100 even, right on $66, if it gets to 100, I'd say Tesla's well above all-time highs at that point. So, we'll see. Maybe that'll happen. Maybe if all the growth tech stocks kind of get back down to, not to where they were, but to only be down 20% from their all-time highs, for example, then in that case, Tesla could be close, knocking on the door of 2000. So we'll see. We'll see if the growth tech stocks continue to, the macro market continues to favor them at the moment, which they are.
Yeah.
All right, let's do the last question here. We're just past 10:30. So from QB, thanks for all you guys do. Question: what's your thoughts on Sandy Munro comments on full self-driving, which is crap, I guess, quote in quotes. Their FLIR, forward-looking infrared, is a better option. The FLIR, forward-looking better. Thank you. I didn't see Sandy Munro's comments on full self-driving. I mean, I like Sandy Munro and his personality overall. I think he's a very smart guy, and he's definitely jumped on the Tesla bandwagon. But he needs to differentiate himself. It's okay. He's not going to agree on everything Tesla does and says. But when it comes to a disagreement, whether it's a respected engineer, independent engineer like Sandy Munro, that's also kind of an analyst on the machine side, versus Tesla's engineering team. There's almost no one I would trust versus Tesla engineering team on any kind of criticisms. Like, it doesn't mean they're always going to be right, but I think Tesla's engineering team is right. Your odds are in the favor for them to be right in any given disagreement with some third party engineer disagreeing with them on something. What do you think, Matt?
Yeah. I think it's very easy to criticize full self-driving right now. And like, I've done that too. Just like, here's the current state. It's worse than like a 18-year-old driver, let's say. Maybe it's not as bad as like a 16-year-old driver who's like just learning for the very first time, but it's not super great. It's still super impressive that it can do as much as it can. But I think it's a huge mistake to look at the current state of this incredibly complicated AI project, which is in like a very kind of like weird stage where it's just good enough to kind of do some public beta testing, but it's not anywhere close to like the stated end goal. So you need to look, in my mind, around the corner, and what Elon, I always try to think of like, why did they go this route? And what Elon said like 4 years ago or 5 years ago, I think it was, that really clicked to me. And I'm paraphrasing a little bit, but he said something to the effect of, like, you need to solve passive optical, which is like vision-based detection, extremely well. And like that's the goal, because that's the way that the road system was designed. Then which is an incredibly hard thing to do, which we all know, right? Because it's not super good at it yet. But at the point at which you have solved passive optical extremely well, then that can do all the stuff that forward-looking infrared or LiDAR or whatever can do. So at that point, it's just redundancy and extra cost. And to me, that makes sense. Now, is it possible that it's just unsolvable? Maybe. It seems highly unlikely to me that by driving is just unsolvable. Maybe it takes 5 years from now to get to the point where it's better than humans. I think that's unlikely as well, but it's a possible outcome. So I think we need to be arguing in terms of how soon is it achievable, and are there different technology stacks that will solve the problem better than passive optical, than vision-based driving. To me, it seems like passive optical is the right way to go. But it could end up being the case that there are a lot of technical reasons why it's just harder than we thought. And so maybe there's these other steps that can be better than humans as well. But to me, that seems unlikely.
Yeah. So it was a great chat, guys. This is one of our better episodes, I thought. So it's recorded on Good Soil Investments YouTube channel for viewing right after, and also on Twitter Spaces if you want to listen to it. Thanks, everyone, for joining us, and we'll be back next week at the same time.
Yep. Thanks, everyone.
All right. Thanks, guys. 9:54 as we leave. Hopefully that keeps going up. All right.